Copper just hit the 100th percentile, and copper at this level is a leading indicator of global industrial demand. Something is breaking beneath the surface, and the data confirms it. Right now, the S&P 500 is at 7,365.1, the 99th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection, says the data needs to confirm. The commodity analyst says, "We are in a commodity supercycle driven by underinvestment and deglobalization." In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst commodity supercycle call is paying off. Oil at $93.1 and trending their direction. 137-day streak, Gavin called it. Credit will blow out. Investment grade spread at 79 basis points confirms it. 6 days running, Snyder just moved from early to right. Snyder called it dollar liquidity crisis. Yield curve at 0.49% confirms it. The volatility expert just moved from wrong to right. The volatility expert called it volatility expansion. VIX at 17.4 confirms it. Too early to call McElroy right or wrong. The thesis is building but not confirmed. 136-day streak. Too early to call Hartman right or wrong. The thesis is building but not confirmed. 130-day streak. The dollar analyst might be right, but the data has not confirmed the thesis yet. Score today. 4 right, 3 early, 0 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question: are commodities in a supercycle? Or is this the top? On one side, says the data needs to confirm. That is the setup. Everyone hears it on the podcast. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here is what makes this interesting. Oil is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. Oil at $93.1, 87th percentile, down 2.1% today. Gold at $4,746, 81st percentile, up 1.4% today. Copper at $6.2, 100th percentile, up 1.4% today. Bottom line, right now the commodity analyst has the better case. Copper at $6.22, 100th percentile, says the data is moving their direction. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $93.1. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $93.1 is in the 87th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,746 will track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 71 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 79 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, copper-gold ratio flashing red. Gammon says, the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 71 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. Jefferson, AL. People moving in can't afford to live here. 22,742 households moved into Jefferson, AL. Their average income, about $67,000. Median home, about $905,000. Unsustainable migration pattern, demand without purchasing power. Los Angeles, CA, payment burden is past the breaking point. Beverly Hills, CA, median home about $2,245,000 on a about $118,000 household income. Price-to-income ratio, 19. When the math stops working, sellers find out before buyers do. Kings, NY, payment burden is past the breaking point. New York, NY, median home about $1,089,000 on about $57,000 household income. Price-to-income ratio, 19. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Copper at $6.22 is in the 100th percentile. That means it is higher than 100 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $93.1 is in the 87th percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, the commodity analyst is on the right side of this trade. The data is not ambiguous. Here's what the data says to do right now. Stay alert on VIX. It is dropping 5% today. Fast moves demand attention. Avoid Phoenix at 40% payment burden. That is stretched territory. Phase 1 holds. No alarms, but the runway at 71 basis points is shorter than last month. 4 out of 7 speakers are right, the commodity analyst Gammon Snyder and the volatility expert. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe, and I will see you tomorrow morning.